Imagine this. You wake up one morning to find out that $10 invested years ago is now worth $10,000. Sounds too good to be true? Well, it's not. Welcome to the world of the stock market, a place where fortunes are made, dreams are built, and yes, sometimes shattered. But here's the kicker. If you're not in the stock market, you're leaving your financial future to chance. In today's video, I'm going to break down the basics of the stock market, what it is, why it matters, and how you can get started. Whether you're 15 or 50, this knowledge is your ticket to taking control of your financial destiny. Stay with me, because by the end, you'll understand why not investing might be the riskiest decision of all. Quick question. What's riskier, investing in the stock market or stuffing cash under your mattress? Think about it. We'll come back to this in just a second. What is the stock market? Let's start with the basics. The stock market is essentially a marketplace where buyers and sellers trade shares of companies. Think of it like Amazon, but instead of buying sneakers, you're buying a piece of Apple, Tesla, or even McDonald's. When you own a share, you own a slice of that company's profits, decisions, and growth. But here's where it gets exciting. Over time, well-performing companies grow in value, and so does your investment. It's like planting a tree. Nurture it, and one day it will bear fruit. But what if the tree doesn't grow? What if it dies? Stick around because we'll address the risks in a moment. Why is the stock market important? Inflation, the silent killer of your savings, is like a termite eating away at the cash you hoard. On average, inflation in the US is around 3% annually. That means if you're not investing, you're losing purchasing power every single year. The stock market, however, offers a way to outpace inflation. Historically, it has delivered an average return of 7 to 10% per year. Over decades, this difference becomes monumental. Think of it this way. While your mattress money is shrinking, stock market investments are busy doing push-ups in the background. How does it work? Here's a simple analogy. Imagine you're at an auction. Companies like Microsoft or Coca-Cola are the items up for bid. Their stock prices rise and fall based on supply, demand, and their performance. As an investor, your goal is to buy low and sell high. Or better yet, hold on to great companies for the long haul. But here's the twist. Timing the market is like predicting the weather. Good luck with that. Instead, focus on time, in the market. But how do you even begin? Do you need to be a financial wizard? We're getting there. Getting started. Starting is simpler than you think. Open a brokerage account, pick a few low-cost index funds, and invest consistently. For example, the S&P 500, an index of the top 500 US companies, has turned ordinary people into millionaires through steady investing over time. Here's the hard truth. Every year you wait, you're losing precious time for your investments to grow. The earlier you start, the bigger the payoff, thanks to the power of compounding. Overcoming fear and risks. Now let's address the elephant in the room. Isn't the stock market risky? Absolutely. But so is not investing. Imagine being 65, ready to retire, and realizing your savings won't last. That's the real nightmare. The key is diversification. Don't put all your eggs in one basket. Spread your investments across different sectors and companies. And no, betting everything on meme stocks doesn't count as diversification. The stock market isn't just for Wall Street pros. It's for anyone who wants to grow their wealth, beat inflation, and secure a brighter financial future. Now that you understand the basics, let's take this journey a step further. Click the video on the end screen to discover the power of compounding, a concept so powerful, Albert Einstein called it the eighth wonder of the world. Don't miss it. Remember, the best time to start investing was yesterday. The second best time? Right now. Let's get started.